Good morning, everyone. Welcome to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. And finally, a survey will be sent looking for your feedback, and this session will be recorded. The topic for today's session is dealing with IRS letters, notices, interest, and penalties. The tax expert for today's session is Kelly Coughlin. Kelly is a CPA, the chief executive of Everyday CPA and founder of Tax Resolution Help Center. Kelly has been a CPA for over 20 years and has helped countless individuals and businesses remove, reduce, and resolve past, present, and future taxes so they can live a happier, healthier life. Kelly says he loves seeing the relief his clients experience when they get the IRS off their backs. With that said, introducing Kelly Coughlin.
Hello, everybody. May, thanks for the introduction. Very nice. You're getting quite good at that introduction, May. Have to say that. Today, we're going to start Monday again with our recurring tips and tactics to deal with IRS and state letters and communications. There's hundreds of different letters that the IRS can communicate with you on, but they all have kind of a different purpose. But I like to use the metaphor of overheating car, clogged toilet, tax notice. These are three things you don't want to ignore. They just get worse with time and age. I don't need to go into details on why that is the case with those other two things, but recognize that tax notices are kind of in the same category. Just don't ignore them. That doesn't mean you panic in dealing with them, but most of the time they're just questioning you on something that happened that was filed in your tax return that they just have additional questions on. So no need to panic on these things. They're not audits, even though we've got this army of 80,000 IRS agents out there allegedly conducting more audits. These things aren't audits. These are letters that identify, and the IRS is just looking for more information. So I'm going to quickly go over the overview on 5 tips to resolve these, and then we're going to take every week we're going to take a different letter and just talk directly about that letter. The first part of the session is going to be how to resolve it, because they all have some common themes in terms of resolution. And then we'll take each letter so you can get comfortable if and when you get a letter from them. The 5 tips are: verify first your identity, make sure it's the right person. Sometimes they make a mistake, so just look at that social security number, name, address, make sure that's correct. It's probably the same correct address if it got to you, but look at the identity, make sure they're talking about you. Second is the tax year. That's typically in the upper right. It'll say tax year there. And then there'll be a notice type. This is CP 2000 as an example. I forgot the number. There's thousands of different types of letters that the IRS could send. So identity, tax year, notice type. Then you get down to the more nuanced thing: is what's the purpose of this? Why are they sending you identity, a notice type for this tax year? That's the purpose. Why are they sending you this? And then how do you resolve it? Those are the 2 things. So those are the 5 things to go over. If you want more understanding about the IRS notice or letter, there's a website here, Understanding Your IRS Notice. You can search that. Attend these sessions. You'll become an expert on that. If you were dying to become an expert on IRS tax notices, letters, here's the 5 tips again: identity, tax year, notice type, purpose, resolution. There's 204 types of letters, I guess not thousands. 6 million CP 2000 notices get sent out. I think that's the largest one, that the most volume that gets sent out. So today I'm going to talk only about the CP 2000. So the CP 2000 is really a discrepancy that's been identified from your tax return that the IRS is looking for explanation of. So it's a discrepancy. And the discrepancy comes from information, either income information or payment information, that the IRS has received from third parties, such as employers, financial institutions. But it typically is one of the 2. It's a business typically that makes a filing with the IRS, and they match that filing with the information you reported on your tax return. And so if there's ever a discrepancy that may cause an increase or decrease in your tax, potentially, then they want an explanation. Unfortunately, they're very quick to identify anything that would increase your taxes, very slow to identify any discrepancy that might decrease your taxes. They say that that's not the case, but I don't see too many times that the IRS says, hey, you made a mistake here and it's going to result in a refund. I think allegedly that can't happen. You just don't see that often. So typically the discrepancy typically will potentially cause an increase in your tax. Again, it's not a bill. It's not a audit. It's simply the IRS saying, hey, there's a discrepancy here. Could you tell us why this discrepancy exists? It might be that the business or employer or the financial institution sent incorrect information. Typically, that isn't the issue. Businesses have people that accurately process and file, and there's controls in place to prevent that. That said, there are times that's a mistake. So make sure that you look at it and verify that it was your information that was correct in that tax filing. I'd say, I don't know what the percentage is, 90% of the time, it's the taxpayer didn't report something or misreported it. And so it doesn't mean you don't look at it more carefully, but again, it's not an audit. That's the number one thing. This is not an audit letter. It's indication that information was didn't match what they expected to receive. So then you dig into it and you figure out, well, who is what's the resolution of this? It could be you didn't report some interest income. No, again, nobody's alleging intention and fraud or anything like that. It's you didn't get a 1099. Maybe you had a broker statement. You didn't include all the sales of a security. You didn't include interest. There are many sources of income that could be potentially identified. That's why I encourage people. Very first session I think I did when tax season opened is my first one was tip was don't file too early. Just if you're getting a refund, you want to get on that refund real quickly. But if there's any chance that you did not receive a 1099 miscellaneous, 1099 NEC, that's where people get in. I'd say the most difficulty is on a 1099 NEC. They did some self-employment work. They didn't include that in their tax return, $1,000 tax payment. They missed that. They forgot that they did this work. IRS sees that. It's easy. That's a no-brainer. They get that from the company you did that work for. They don't see, IRS doesn't see that on your tax return. Bam, letter goes out. Again, it's not an audit. It's just, you didn't report this. What's the deal? Did you get it? Oh, yes, I did get it. So then you just deal with that. Sometimes the resolution is an amended return. I would say in a 1099 NAC or miscellaneous, self-employment work. There aren't too many businesses out there that where you can just earn, let's just say $1,000 and not expend any money to earn that. It could be cell phone, it could be office supplies, it could be mileage, it could be something. So don't just there's $1,000. IRS is going to overstate the tax due. They're not going to say, well, we assume you had some expenses to do that. No, they're not going to do that. They're going to say you owe $1,000, whatever it is, and it's up to you to challenge that. And if you're going to challenge you're not going to be able to challenge the amount. You got the $1,000. It is what it is. But what you can do is challenge the tax on that, and that would be something like file an amended return that showed you had $500 in expenses related to earning that $1,000, and that cuts your tax in half. So that's what you can do. But first, identify what was it, validate that it was you, tax year, et cetera, and then look at it and say, okay, what did if it was an unreported income thing, was it accurate? And if it is accurate, then is the tax calculation accurate on that? So that's it for today's session. Keep an eye out for CP 2000s. Don't file too early. Everybody, all financial institutions should have issued all their tax documents to you now, but sometimes they trickle in. K1s tend to trickle in. Those of you that have partnerships and S corporations, that they tend to be the slowest of all. And so just file amended returns on those. Just file extensions on those, so you don't have to file an amended return when they come in. That's it for me. May, is there any questions I need to deal with, or can people get on with their life today?
Yes, we do have a question. This is a private message from our live stream, and the question is: if I get a CP 2000 letter, does it mean I am in trouble with the IRS?
No, you're not in trouble. You will be in trouble if you don't respond to it. But you've got, typically it's 30 days. So don't ignore it. Just like your car is going to be in trouble if you don't deal with that. Overheating car and the toilet thing, well, you know what happens there. So make sure you respond to it. But no, you're not in trouble. They're just saying, hey, there's a mismatch here. Can you help us understand this? And so there's no worries on that. You're not in trouble. Uh, just make sure you deal with it so you don't get in trouble. And their version of trouble is they'll just keep, they can apply pressure, wage garnishment, these kind of things if it goes over time. And it's not worth it. Just deal with it head on, get some help if you want. We have a service where we charge, I think, $350 something. If you don't want to get on the phone, you want to deal with it, get one of us to help you. No problem on that if you just don't want to face up to it, which is totally understandable why nobody wants to deal with the IRS. But you're not in trouble, but you will be if you don't deal with it. Anything
Oh,
else?
yes, thank you for that. We do have a question from our Zoom. One of our attendee from Bob. He's asking if I need more time to respond. Is that all right if I ask for that time?
Absolutely. Yeah. Ask for another 30 days. They're not real keen on granting much more than 30 days at any given time, but get 30 days more. And then if you need more time, ask for an additional 30 days. Just don't drag it out too long. But I mean, certainly within 60 days, you should be able to compile what you need, but there are times when you can't. So I always ask for 60 days, and then I don't think I've ever been granted that. You can get 30 days and then just call back again and ask for 30 more days or send them a letter. You don't need to send certified letters or registered mail letters. I do like to send communications to uh, IRS by the U.S. Postal Service. It's called priority mail. Um, it's about $8 an envelope to send. You get a you get a tracking number. It's not as expensive as the other, but it's fairly easy to get. So I actually have a bunch of those ready to go out. You can buy a $8 stamp, whatever it is right now, and have the envelope so you got it ready to go, and you get a tracking number. That way, it just helps kind of um, confirm that you did in fact send that. A lot of people say they send letters to IRS, they don't, so it puts you ahead of most people that way. Anything else?
Well, that's it. That's the last question for today's session. Do you have anything else you want to add?
Nope. If we can help out, please reach out to us and join Tax Resolution Help Center. We need your help. We try to offer tons of education information sessions to help you, empower you to deal with your tax issues head on without having to pay somebody. Taxes represent anywhere from all in 35 to 60%. So it's a big chunk of your savings and income and wealth. So yeah, it's probably a dull, boring topic, but it is what it is. It's an important cost that households have to deal with. So that's why we're doing this, to empower you to try to get better control of it. Thanks for watching.
All right. Well, I will thank you for today's early morning session, Kelly, and have a great day.
Thank you.
Well, that's it for this Q&A portion in today's session. And I want to thank all of you for attending. Our commitment is to help you reduce your taxes and increase your wealth. We do this with a tri-tax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt. A happier, healthier life. If you are not yet a member, please join us for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com. And please join as a member today for $19.95 per month. Thank you all for attending.